start off every week with a, kind of conversation about what was happening overall for the week in the stock market. Obviously in retirement, one of the big things is, being able to have enough money to retire long term. And so the stock market is, one of the places to look, just because it has a much higher average rate of return than inflation, can keep your buying power intact. But it's a tricky place sometimes, especially recently as far as that goes. So let's take a look. All right. Again, we've had this chart up for a while. This goes back to, end of 2018, and we've just been adding to it week by week. And you can see, we had the big pandemic drop, and the drop that's right over our heads was the drop that came from Liberation Day, more or less, more or
Yep.
less.
It's been a pretty flat week. You had some up and down days, but overall it's been a flat week.
Yeah, it was down on Monday, right? Down today. It was up a fair amount yesterday,
Mhm,
for a variety of different reasons. I think, I'll start off the conversation that actually was happened last week, right after our show got off,
mhm,
and after the market was closed. The appeals court determined that the tariffs that are being used under this emergency declaration were illegal.
mhm,
78% of the tariffs and tariff revenue is under this emergency declaration. So it's kind of a really big deal. The International Court of Trade in New York had already, ruled that it was illegal. This was an appeals court with 11 judges. It was seven said it was illegal, four said it wasn't. And I think the thing that's most interesting about that, two things. Number one, is the fact that they didn't go after it the way that everybody seemed to be talking about. So, for example, it's supposed to be for an emergency,
mhm.
right? And so, you put a 50% tariff on Brazil because they're going to try to prosecute their former, president. He doesn't like that. That's probably not an emergency. The fact that we have trade deficits, most people don't think that's an emergency either. Most economists, including myself. And so I thought they were going to try to attack it from the standpoint of, hey, these aren't emergencies. But what they did was a lot more interesting in the fact that they said that this particular, act that was done by Congress, I believe back in the mid early 70s, um, doesn't allow the president to do tariffs at all.
Mhm.
Doesn't say any place in the act that they can do tariffs. What it does say is the president has the ability to regulate imports. And so if you think about that, uh, regulate trade, really, export also. So you've got the situation, for example, where Biden last year was putting restrictions on trade to China from some of the Nvidia chips. So that would be an example of regulating, the trade situation. So, um, but it does not give you the ability to basically do a tariff, which is a tax. Congress is in charge of setting up
Mhm.
taxes. Congress in the past has always been in charge of doing the tariffs, putting on how much gets on and how much, how fast it goes away, those type of things. Um, it was a pretty convincing argument. I mean, basically, the analogy would be the SEC is in charge of regulating the stock market, for example, is one of the things. And so, but it doesn't give them the ability to tax, right?
Yeah, so your capital gains tax goes from the IRS, not the SEC.
Right. And so that's what they're saying. Look, the president has the ability to regulate, but not to tax. That's going to be a hard argument to overcome, although the Supreme Court has been turning over the lower court's opinions left and right when it comes to Donald Trump. So we'll see what happens. But the second most important thing about this is that the actual tariffs that have been collected, which are fairly substantial, have to be refunded with interest.
Mhm.
So 78% of tariffs collected so far could be refunded with interest. And so, Trump has asked that this be expedited to the Supreme Court. I've heard all kinds of different time frames. The lower court asked that, they take the case up by October 14th.
Mhm.
But just because they take the case up doesn't mean they're going to rule on it. I've heard ruling could be immediate. It could be the end of the year or the beginning of next summer. What's interesting about that is if they do rule against the tariffs, they're still accumulating and the refund just gets bigger and
Yeah,
bigger.
more interest, more tariffs you've been paid into.
Yeah, and it was kind of ironic because the bond market on Monday, after it had a chance to digest this, actually Tuesday, because Monday was a holiday. On Tuesday, after it had a chance to digest this over the long weekend, actually fell because they're looking at these tariffs as possible revenue that takes the pressure off the bond market. And worse, if they're deemed illegal, they'll actually have to refund the money, and likely that refund money might come out of selling
Yeah,
additional
it's
bonds.
like a double whammy. Now you have an outflow instead of an inflow.
Yeah, but the irony is that the bond market dropped when they put the tariffs on,
Mhm.
and now the bond market is, dropping because they might take them off, right? So I guess with refunds, that's kind of it is a bit of a problem. And so, that was kind of the beginning of this week was dealing with this whole tariff issue, whether they're legal or not, what will happen. Now, there is another way that they can do tariffs, what's called the line item. I call them the line item tariffs. There's a different name for the actual act. But so, for example, we already have those. That would be steel, copper, aluminum, for example. We got 50% tariffs on those. And so, there's a threat for semiconductor tariffs even today, talking about that again. And so, that's going to be something that they can switch to if they have to stop doing this emergency version. But I think it's really a different dynamic. You go to Europe, you negotiate with Europe, you negotiate with Japan, South Korea. Now I'm trying to put tariffs on pharmaceuticals. Who am I negotiating with?
Mhm.
Right. It's
It's very hard to target a country versus like an industry.
Yeah, exactly right. So I would assume they're just going to put those tariffs out there. Apparently, there are some limits. It takes longer to put them into place, and et cetera. And I won't bore you with all the details of that. But in essence, this is a plan B for them to try to continue these tariffs. It'll be a lot different looking than what we've got now. And I also think it changes the dynamic of these negotiations uh, pretty dramatically in the sense that if you're a country that is still, negotiating over these, you might want to just delay in hopes that the Federal Reserve actually makes, no, sorry, the Supreme Court actually makes these tariffs illegal.
Mhm.
So I don't think that puts the U.S. in a good position, and that's probably why Trump wants to get a resolution sooner than later, which does make some sense as far as that goes. So now, then for other parts of the week, Wednesday and Thursday specifically, we had up markets for the kind of the strangest reasons, right? For starters, we saw that the job openings, which I have the chart here. Uh, oh, this is core PCE. Sorry, the number of jobs created this month was came out today,
Mhm.
right? So 22,000 jobs. Expectations was 75,000 jobs.
Yeah, much lower.
Much lower. Now, I will say this chart goes back into, January of 2022. It's been coming down. I mean, the trend is definitely down.
Yeah, with revisions, they're saying less than 30,000 jobs have been created over the last 3 months.
Yes, and so it's down at a relatively critical level. We actually had, with revisions now, June was actually negative.
Hmm.
That's the first negative month for job growth that we've had since 2020 when we had the big layoffs because of the pandemic. And so we're seeing the market is actually responding negatively to this today, right? And it's kind of fascinating. There may be some other reasons that are out there because what we saw on Wednesday was that the ADP report came out. And so this is the report that shows the number of private payrolls that were accomplished. And it was lower than expected.
Hmm.
Market went up. Then we had, the number of jobs. Actually, that was Thursday. Wednesday was the number of job openings. And so that was down also 10-month low. Okay. So when you kind of take a look at what is happening, the market moved up on both of those.
Hmm.
Why? You wouldn't think it would. You got less job openings, you got less, private jobs. The market's still moving up, mainly because it's re-indexing the factor of rate cuts.
Hmm.
So the stock market loves rate cuts, and generally speaking, 12 months after rate cuts, the market's higher. Okay, on average.
Yeah, it's interesting though because a lot of times rate cuts are sometimes okay. Economy is slowing down. You want to speed it back up, but sometimes those rate cuts won't actually speed up the market fast or the economy fast enough.
Well, if the Fed has a hard job, they generally aren't perfect in terms of their timing. They are often late. And so you can start to do rate cuts that are too far behind the curve.
Hmm.
And you could make an argument now that maybe they are. Like you said, we've had very few jobs created in the last 3 months. And so the problem for the Fed is and this is why you're going to have lots of consternation going forward, is because of tariffs, they were also worried about inflation, and that's their dual mandate. And so if they're late, it's easier to see why they could be late because
Mhm,
they're worried about trying to see the impacts of what could happen with the tariffs. But unfortunately, growth, slowdown, job losses, those types of things are often associated with higher tariffs, especially at this level. I mean, the last time we had tariffs at this level was the early 1930s. Unemployment went from 6% to 25%. You had a global recession. And we're seeing some, precursors to that. We're seeing the long-term bonds, the 30-year bonds on
mhm.
countries, including the US, but around the world.
Yeah, Japan,
Yeah.
UK, EU. It's not just the US, the 30 years.
Yeah, Japan hit the highest yield on their 30-year bonds in history. And so what that means is that when you see the yields go up, basically it means that the markets see uncertainty over the long term and they want to be paid more. Okay. So it's a sign of the market's unease,
Mhm,
right? When you see the 30 years and the longer term yields going up like that. And so even though there's talk about cutting interest rates, the longer term is going up because if you have a big recession, that brings into account, the repayment possibility of defaults on different loans, private equity, private credit, sorry, that's out there. So that's the thing that we're kind of looking at here slowly but surely is just what, needs to happen. And so here's the key in 2023 and 2024, especially in 2024, they were lowering rates.
mhm,
And economy was good. Unemployment was at 4.1% roughly in that time frame. And you had a situation where they're lowering rates because inflation was coming down.
mhm,
And we ended up with 2 years of 20+% market returns. Go back to 2007. We're lowering rates because things are starting to fall apart, right? Just like they are now. I mean, the gross domestic product is half of what it was last year. The job growth is anemic at best, right? There are a lot of great things going on with, the tax cuts and the, possible rate cuts and the, situation with the artificial intelligence. But when we look at, kind of what could be a drag for this, you can see it coming. Now, whether it causes a big recession or not, you've got several people running around with different arguments that seem to be very valid. So we're kind of in that muddle ground in the middle right now. It's where I feel like we're at. We got enough good news, good earnings and such to kind of make things look okay. The market's doing fine. Okay. Like you say, it's down a little bit this week, but overall the market's doing pretty well. The primary direction is definitely still up.
mhm.
And so but there's enough things that said, "Hey, we haven't seen the impact of these yet. We haven't seen the impact of deportations. We haven't seen the true impact of the Fed losing its independence. We haven't seen the impact of what could happen if the Fed starts to lower rates in aggressive manner. That might not work out as well as they hope. That could actually backfire.
Mhm.
And so, we haven't seen, the impact of these tariffs per se yet either across the board. So that's the battle that's happening. We're in this muddle ground. I said August, September, October is when we start to see some of those impacts, and we are, so this is the beginning of that, and we're in that kind of, period of time. And so I think it's a very interesting time to see how things play out. We got tariffs are now up in the air. You got the Federal Reserve. Now, the Federal Reserve, the bet for rate cuts went up from 2 rate cuts this year to three.
Yeah, and now it's gone from there was 0% chance of a half point cut to there's a 11%, I believe.
Yeah, yeah, exactly. So, yeah, 100% chance that you'll have at least a quarter percent, right? And a 11% chance that you're going to have a 50%, a 50 cent, sorry, half a percent rate cut. And so that's what happened last September. It was a surprise. Nobody was really expecting it. I can see why there's a bet there because maybe they should have made a rate cut in July. They had their July meeting, and then right after the July meeting, they revised all of the
Mhm.
previous 2 months
Yeah.
down dramatically. And then they missed, the number for the month prior also for the jobs report. And so maybe if they'd seen that, they would have considered, a quarter point in July. And so I think that's kind of what happened last year too, is that probably should have done something in July. They don't have a meeting in August, so it's kind of a makeup, and
Yeah.
they did a half, and I'd be a little surprised to see a half here because of these tariffs and other potential headwinds that might cause inflation, like the deportations and such too. So we'll see how this plays out as far as that goes. But it's been an interesting week. We had 2 up days that were basically up because the job market was weak.
Mhm.
This today, we're down with the job market being weak. We were down on Monday because of the tariffs might have to be refunded.
Yeah,
You know, crazy.
I think it's a Goldilocks kind of zone with you want the jobs to be weak enough for cuts, but you don't want them to be too weak because then it signals recession.
Yeah, the problem is trend. Okay, so that primary trend is down,
Yeah.
right? So, and that's what Jay Powell was talking about in August was just the fact that the job market can get away from you, and all
Mhm.
of a sudden you're sliding into 5% or
It
something.
goes quick.
Yeah, because it kind of feeds on itself. Once people start losing their jobs, they can't spend money, and they can't spend money. Other people start losing their jobs, and there's sort of this cycle that happens. And generally speaking, when that happens, they get even more aggressive with their rate cuts, and they do different things to try to stimulate the economy to kind of get some of those jobs back. Um, However, when you look at this, chart right here, you realize that the Federal Reserve has had their rates up too high for quite a while.
Mm.
Because if their dual mandate is full employment and we have the unemployment. Here's the unemployment chart, right? So it's the highest unemployment. It's at 4.3% that was just reported today since we've had, since 2020 when we had the big unemployment. I think we got to 15%
Yeah.
unemployment during the pandemic for a short period of time. But the Federal Reserve's target, I don't know, it depends on who you talk to. Some place between 4% and 4.4%. Some place in there is where they're kind of looking at. So I think they felt comfortable about leaving rates up because they felt uncomfortable about inflation. They were
Mhm.
still trying to bring it down and unemployment was still going to creep up because of that. And their very initial projections back before they started even lowering rates, uh, sorry, raising rates to kind of bring down inflation, they projected that inflation would hit 4.4%. So pretty close. And at the time, we were at 3.4%. So it's a big difference. It's a lot of job losses in order to try to
The
kill.
unemployment rate.
Yeah, the unemployment rate, sorry, the unemployment rate would hit 4.4, so that's a lot of job losses from 3.4 to 4.4, and I remember a question coming up saying, "Hey, you're gonna make all these jobs disappear," and they were talking, and Jay Powell was talking about how important inflation is. It hits everybody,
Mhm.
and it's a very destructive force, and it just continues to kind of multiply, so, that's where we're at as far as that goes. It's a Again, short week, but a lot happening this week with the different reports that are coming out and what have you. So we've got what a couple weeks now. 17th
Yeah,
is
17th will
going
be
to
it.
be 12 days from now. We'll have the Federal Reserve coming out talking about what they're doing in terms of lowering and raising rates. September is also a dot plot month. They do the statement of economic projection on the calendar quarters. And so, that'll be interesting to see, what their projections are going forward as far as that goes.
Yeah, we're also going to a very historical or weak seasonality with red September is a very common one.
Yeah, it's kind of funny. We talked about that last year quite a bit. And I didn't hear much about it last year, but since 1928, September is the only month that's negative. I've seen a lot of articles this year
Yeah, well,
talking about it. And unfortunately, honestly, the more something gets talked about, the more it goes the other way.
mhm.
It's just amazing how that works. I will say a rate cut, even a quarter point rate cut, it stimulates the market. It may or may not be a huge boost in September. You do a half a point like last year, we ended up with a positive September, right? So we'll see what happens there. There is some wild cards that can happen that, aren't normal as far as that goes. So anyway, that's our summary for what happened this week. There's again a lot going on, and we'll see. We'll keep looking at it. We'll talk about it again next week too. So thank you for joining us for that part.